Hello and welcome. I'm Uday Pratap Singh. You're joining us on NewsX and Business World panels on the Indian economy. Yes, it's that time of the day when we decode the current state of the Indian economy. Look at, of course, some big questions concerning India Inc., corporate India, how entrepreneurs and businesses have stayed resilient despite the adverse impacts of the pandemic. And at what stage we are on getting back to the recovery path and the high growth levels of the pre-COVID era. As always, we have a power pack panel joining us live. Vinod Tarakan, founder and MD, Clasys Technologies, live with us. Rajul Jain, CEO and co-founder, INCREFF, is joining us live. Rajesh Gupta, co-founder and director, Busy Accounting Software, is live with us. Kriti Agarwal, co-founder and CPO, Store Hippo, is joining us live. Amit Agarwal, founder, Oki Poki, is also live with us. And Dr. Anurag Batra, chairman and editor-in-chief, Business World and Exchange for Media Group, as always, joins the panel live this evening as well. Welcome all of you and thank you for being with us. Now, before we dive into the personal stories of our panelists and the opening comments, I want to get Dr. Batra in first on a pressing issue, which we will get our panelists to weigh in later on. But Dr. Batra, let's get your opening comments on it. Top of the show. Now, we're speaking at a time when there have been farmer protests in the NCR region for over 2.5 weeks now. And there seems to be no let up with the number of farmers increasing there day after day, despite the government, getting on the dialogue table and speaking to various unions. No breakthrough just yet to the deadlock and logjam. Now, in the last 2-3 days, CII and ASSOCHAM have come out and said that there is a tremendous economic impact, particularly in logistics and supply chain disruptions due to the farmers' protests. Is that concerning, Dr. Batra, in an already tough year for economy?
It's been a tough year for the economy overall. It's been a tough year overall from a life standpoint. Just to give you statistics from Delhi, because of the farmers' protest and the bunds, a lot of laborers have not been able to reach their factories. They've not been able to report at work. So while it leads to a supply chain disruption on the manufacturing side, for those individual laborers, it is a loss of pay. So clearly, the farmers' protest is leading to some disruption in the economy. Having said that, I think over the next 1 to 2 weeks, I see that subsiding. There will be a middle ground. And the government has started to do an outreach to farmers to explain the farm bills and the implications of the farm bills, which are not necessarily negative for the farmers. Yes, it tends to eliminate the middlemen in a way that the farmers can get a better price if they have the right product and they make efforts to go to market. But yes, the farmers still, and what has come with it is added to the confusion and to the hardships of many in the areas that have been impacted, especially the Delhi-Haryana border, the Delhi-Gurgaon border has seen some kind of bottlenecks, and really it is impacting work for a lot of people who report to work on a daily basis. So clearly, I hope it doesn't last. Also, clearly the farmers should be back where they matter, which is in the farms. They shouldn't be on the road and protesting. I'm not taking away the right to protest, but I'm saying, clearly they need to get back to producing what they produce. And I think there'll be a middle ground at some point soon, because the government's belief is that the farm bills are good for the farmers and it is sticking to it for now.
Okay, let's go. We'll get to our other panelists to weigh in on that a bit later on the show, but let's go straight across to Vinod Tarakan first. Vinod, your comments, of course, we had you briefly on a previous edition, but let's discuss in detail today with you on various aspects of this tumultuous year. Firstly, how's it been like for your venture? And, what were some of the dynamic decisions that you had to take to circumvent and mitigate some of the huge impacts of the pandemic and lockdown?
Right. So thank you for having me. I think with regards to our business, we are in the technology business as a software company. So we were fortunately very lucky given the circumstances around the COVID pandemic. Most of our businesses, in the United States, and there was no letdown. We were actually preparing for a slowdown, but there was actually a ramp up in business, and also the work from home mandate allowed our staff to work from home. So we were in an interesting situation. We were kind of on an island surrounded by chaos, let me say, because in our industry, we were okay, but we also have affiliate businesses in the construction sector that basically ground to a halt. So I would say certain industries have been lucky, like the technology industry, where working from home has been practical. But the majority of the other industries obviously have been impacted in a big way. And interestingly, we also do a lot of work in the financial services sector. And I think there's a lot of opportunity in India to adopt some of the best practices that are happening in the Western countries to just support our economy.
I just want to ask you, last time you were talking of that SMEs and enterprises, in spite of the government directive to the banks to be opening up their purses more liberally, and as per the relief measures that the government gave, the banks were very conservative. And when the banks are conservative, it does not create GDP, it does not create an economy, it doesn't help the entrepreneurs. What do you have to say to that?
Right. So thank you for that question, Anurag. I'll share two perspectives here. The first perspective is just the basics of how the economy works, right? The economy works through spending. And as long as there is spending in the economy, the total spending adds up to the GDP. One person's spending is another person's income. So if the spending slows down, that's when you see the hit that we see in terms of job losses and such. So the fundamental issue is, how do you boost spending in the economy? And primarily, you can create all kinds of incentives around the current functioning of the financial system to boost spending. The easiest and the simplest one is to dramatically drop interest rates on any kind of lending supporting capital expenses. We have not seen that happen in India because, for example, if the government or the RBI structured a promotional interest rate for capital expenses for businesses and startups and such, you will see an exponential increase in spending that will definitely boost the activity in the economy. So that is one side of it, right? On the other side of it, when you look at the banking sector and the conservative approach of the Indian banks, I think you just need to look at the basic statistics. In India, we've got 34 banks that control 94% of the assets or the lending in the country, just 34 banks. In China, we have 3,200 banks that control about 80% of the lending. And in the United States, we have more than 10,000 banks. So I think the fundamental problem in the financial sector in India is the fact that we barely have enough financial institutions to participate in the economy. And as you know, it is commercial lending or any kind of lending that drives the economy. And just to support that, if you look at the money supply in India, 85% of the money supply in India is driven by bank loans. Only 15% of the economy is money created by the RBI. And these are a few facts that are not understood very clearly, I feel, at the highest levels even, which is why we are not seeing the action on the ground that should be taken, in my opinion.
And what is the solution to this? Clearly, banks need to lend more, and that will create its own spending. But banks don't tend to believe it's productive lending, if I may use that term. They don't believe there being ROI. So they're conservative because, they believe that the credit quality overall may not be what it seems. So what is your solution for this?
Yes. So when you look at the data, Anurag, if you look at the NPAs in India, right, the non-performing assets of the banks, 78% of the NPAs in India is with the big corporates. It's only 22% of the NPAs that are with the SME and the small business sector. So these are some data points, I think, that needs a lot more debate and discussion, because we are penalizing the highest contributing industry in the country for jobs, which is the SME sector, through squeezing the credit available to them. And while we're doing that, the actual troublemakers are the big corporates, right? So that's one thing. The second part of this is, I think there is a lack of understanding on the concept of inflation. So let me just explain what I mean. If in the country we increase the money supply, the only risk we have as an economy is inflation, and inflation being the increase in prices for basic commodities and goods. Now, that is the fear that everybody has. That's why the RBI is very conservative with both interest rates and controlling lending and controlling money creation in terms of a stimulus program as well. But when you really look at the data, inflation is again driven by the availability of products and services. So if you boost the creation of products and services, there is an obvious impact because the higher availability will ensure that it will offset the increase in the money supply churning in the system. So I'm sorry if I'm getting into a few data points here, but
No,
I think it's very important.
For entrepreneurs to get capital at the right time and hopefully at the right cost. So thank you for building on that theme. Raju, let me ask you, over the last 8-9 months, how has your company done and how do you see the way forward?
So company has done extremely well in last 8-9 months. So what I would say is, we are living in two worlds today. Yeah, there is a physical world and digital world. A physical world got disrupted, but digital world came and supported that physical world. That's how I would put it. Yeah, and so it will, there is a risk mitigation now in place for the whole world. I hope the vice versa never happens. Yeah. But anyways, so 2 months of lockdown were difficult for us, but otherwise it has been fantastic. Our growth journey has continued. We have doubled our revenue in last 9-10 months, and we continue with our growth journey in future. And now we are looking to go global. So,
and Rajul, this was aided by a forced lockdown. A behavior that was kind of thrust upon us. Tell us, when you deal with your consumers, what are the habits that you see that have changed forever and will aid your business?
So we are a B2B company. Yeah. So our clients are businesses. Yeah. So in terms of their behavior change, I think one which is going to benefit loads and loads of companies in India, especially tech companies, and that is now your client doesn't want you to visit them. Yeah. And that means sitting here in my house, I can access any client globally. Yeah. Because he is not expecting me to be there. Yeah? And this will have a huge impact on Indian tech companies, Indian tech startups, very, very positive. That's the only change I can see. The other change I can see in my client behavior is they all now want to adopt more and more technology, more and more data science, more and more technology.
That's very understandable, totally believable. Let me go to Kriti. Kriti, give us a sense of how your business changed over the last 8 months and where are you headed as a business?
So initially with the lockdown, our business was impacted, heavily. But going forward, it has really, really done well. We have increased our growth to almost 60 to 70%, and our skilled, the employment has increased. We have almost doubled in last 6 months. So initially we were focusing on different, globally, and that global thing has increased, and we have customers now all over from 20 geographies. So that ways it has really, really done a great thing for this e-commerce sector and for our clients.
And again, give us a sense of where does Store Hippo play, and when you enter 2021, what are the product categories that will drive your growth?
In terms, so it will be diverse. So starting from SMEs to big brands, everybody wants to come online and start selling. So with the omni-channel presence, everybody wants to go, give a mobile e-commerce a chance and, cater to the customer's needs. So
you're saying that, for example, Kirana Tech, the neighborhood Kirana stores are becoming e-commerce enabled, and that's a huge opportunity. With Facebook, everyone wants to kind of garner.
The penetration of internet, I think, Anurag, that everybody wants to come online. So tier 3, tier 4 customers, they are also online. So they are also exploring this option and, buying goods, since the physical presence is difficult in today's time. Physical buying and
fantastic. Rajesh, you heard your panelists, and what is your direction in terms of the business that you've taken over the last 8-9 months? And as we enter 2021, where is your business headed?
Yeah, initially for 2 months, there was no revenue because our customers are all SMEs and MSMEs. So everything was locked down and we were also waiting for things to open up. But for last 7-8 months, it is recovering well, and we have done around 30 to 40% growth also. So that is a good sign. But I still think our customers, which are primarily SMA and MSMEs customers, they have not recovered well till now. One of the reason is the problem of liquidity, which they are waiting for from government for government to do something. And another point is the compliance part in GST. The GST compliance is getting difficult day by day, and SMEs are already struggling with the liquidity problem, and the GST part is also making their life difficult. So this is my view, and the next year we have now our product is offline product which runs in the computers of customers, and now customers have started demanding online product. So we also need to go online within next 1 to 2 years, because that will become the need of the hour. Everyone would like to go online, because traveling has become difficult due to the pandemic. People don't want to meet. Accountants want to do the work from their home, and the businessman wants to see the reports from their mobile or from their home. So our target will
That is
be
totally
to
understandable, and clearly any business without capability of digital or engaging with its stakeholders digitally, whether it's a B2B business or a B2C business, is a given. Let me bring in Amit Agarwal into the conversation. Amit, most businesses on this panel have seemed to benefited from the COVID. Tell us what has happened to your business in the last 8-9 months, and where are you headed?
Sure. I think we've sort of been prepping up for all this time. Sorry for the dark room. There's an unplanned power cut. So I'm looking very, very dark, ghostly face. But we were a very...
You're looking very okay.
So we're an education-based technology company. We were in the... Yeah. We were in the garage at about 5 people team size when COVID happened. Today, needless to say, we more than quadrupled, and we can't hire fast enough because of the sheer response we've had. I think what's fascinating to me as a founder is the demand it unleashed all across the country. We never thought that we will get to users from Shillong, Jharsuguda, Khanna, and Sangrur, and so many more towns. We now have success stories of little geniuses in our vertical across hundreds of cities, which was unthinkable for an angel stage startup before COVID. So as a sector, from a technology, digitally dependent business, we have really benefited. Going forward, I think what also happened, because we're the pioneers in early childhood space and we teach English, so we sort of fall into the skilling category. New opportunity came in front of us because suddenly there were 1 million+ teachers that were looking for something to do online, which they'd never tried before. They were trying to look for secondary incomes through home tuitions online, which they'd never tried before. And what we found ourselves doing was, even at an early stage, setting up an ambitious target of these teachers through a teacher academy that we incubated within our company to bring quality best practices to the teachers who are trying to do that. And we're very, very bullish on 2021. I think EdTech has seen huge amount of funding. The consumer demand therefore has gone up. Earlier we were probably planning to localize in maybe 7 or 8 languages. But now that demand has gone up to about 25, we can't really keep up with people who are asking for help at this stage. I believe it's our moral duty to just step up our game and be able to do that. And I hope we do a great job of it. The other point, macro point on 2021 is that the M&A activity will go really, really crazy. Invest globally deals and vice versa. A lot of global investors are more increasingly doubling down in India. The traditional economy is suffering in a very, very big way, which is sort of creating the opportunity for players like Oki Poki in the system. So the interplay of this M&A activity will be huge. I mean, we've seen some of it, Unacademy, Byju's acquiring smaller players. Unacademy probably did like a couple of deals during this time already. So it's only going to accelerate further when we look at the next 12 to 18 months. And I think to pick up Kriti's point about seeing more global geographies coming into play, that's happening to us. We're seeing accidental revenue from more than 10 countries already. And like I said, at an angel stage, you don't even plan for such things. So we can't run fast enough is our outlook on 2021.
If I had to ask you, that, clearly in every segment and sub-segment of edutech, it's overcrowded. There's very little differentiation. And, it's money driving their growth, not necessarily adoption is organic. So what do you have to say to that?
I think wherever there's a gold rush sort of an impact to any economy, whether it was to sanitize a business, whether it's to edtech, there'll be a lot of bad quality players, average quality players who will also come into play. Eventually, the best players, the most innovative players in this game will win. For example, we care a lot about data sciences, artificial intelligence, offering true personalization in the new era of blended learning to our users. And I was speaking at Thai Global Summit a couple of days back. And there also I said, I think the problem is fundamentally before COVID also. This was just so much of an opportunity over here. It was a white space. So you do one good job in just one subject at one age group like QMath, and you got like 100 crore plus company. You do some good job in test prep, and you've got like a unicorn that the biggest that the world has ever seen called Byju. You see something in just civil services entrances, and you see an academy. So I think Indians are hungrier than ever before. What has happened is internet penetration has suddenly gone up more, which was already at a faster clip. So people are observing these lifestyles, these parallel options, the way the jobs are getting created in the internet economy. And they're investing in their education everywhere. They're also becoming aware that sitting in their Shillong, sitting in their Charsukuda, they can access the best talent that the world has to offer from teaching perspective, skilling perspective. So bottom line is what I made a statement, which I'm sure you and I will debate one day, is that there will be 100 unicorns in edtech over the next 3 to 4 years. And it'll happen globally because it's a global phenomena that COVID has created. The reason is offline already had to evolve in more ways than one. We studied in the old economy era where there was hardly any internet till the time I finished my MBA. But ever since my YouTube days, that's what we've been saying, that this adoption has to come because the media advantages are so tremendously in favor of internet, and the penetration has never been deeper or wider. Post-Geo, it had already unleashed, and that's going to accelerate further. So yeah, to recap, 100 plus unicorns is my bet if I were an investor.
The only thing I'd say these days, they're not called unicorns, they're called proficons. They're profitable unicorns. They're no longer animals, but they're actually institutions that are making an impact. Uday, would we like to take a break before we come back?
We can possibly go to Rajul Jain for another additional question, and then we can take a break after that. Rajul, why don't I come in? Why don't I come in? Yeah, Rajul Jain, do you believe that the one venture, or the one learning rather, or trend that we've seen this year is that every business should have a digital component or a virtual component, because it's been those businesses who've managed to survive far better than the others, isn't it?
Yeah. So, sorry, I didn't get the question.
Rajul, Anurag, you can go ahead.
So basically, Uday is saying that what did you do? There are certain players that thrived in this environment. There are certain similar players which didn't thrive. So what did you do differently that made you kind of thrive and prepare for the future?
As far as we are concerned, we are a technology company. Yeah. So we were thriving before COVID. We are thriving during COVID, and probably will thrive more after COVID because of advantages which COVID will bring.
Okay, Vinod, would you like to take that? Vinod, the question I was of course asking is, has one of the lessons of 2020 really been that you've got to have a digital element to your business? You've got to be futuristic, and those businesses, which have been dependent on technology or are using technology far more than the others, have managed to survive this year far greater than others.
Yeah. So
right.
here, sorry. Yeah, I can give a
Vinod,
view on this.
Rajul, I'll come back to you. Vinod, why don't you take that?
Sure.
Right. So what you're touching on is a key factor that has come out of the COVID crisis, which is the whole need for digital transformation across the board. Right. Before it used to be looked at brick and mortar businesses and then pure digital businesses, but now the two have merged. And I think the really big opportunity with India, and as you can see from the feedback from the panelists today, everybody in the technology sector has not really been impacted through COVID. And based on the work that we do in the Western economies, I can say that the Western economies look to China for manufacturing to some extent. They also do manufacturing in India, but China's got a brand around manufacturing. And then they look to India for services and technology. And I think if the marketing and positioning of India as a great center for services can be done a little better with incentives at the back end, I think it's a greenfield opportunity for India to take control of. And there is a massive demand for digital transformation driven specifically by the COVID crisis, not just in India, but in the Western economies as well.
Rajul Jain, yes, you can quickly weigh in and then I'll take a break.
Yeah, so we deal with a lot of fashion brands, variety of fashion brands, international, national, etc., and fashion retail companies. And I can say, let's say, brands which were online dependent only, selling 100% online, they have grown tremendously. And then there are brands which were like hardly any presence online. They have suffered the most.
Exactly, yeah.
And yes, everybody is now adopting, let's say, e-commerce, more and more focus on e-commerce. And every brands I meet, I think their first focus now is that their own online channel, their own .com, they want to make it as the biggest sales channel. And I have seen that, I'm seeing that across even FMCG sector as well. So the whole movement, it has to happen. It would have happened, let's say, next 7-10 years without COVID.
Okay.
Because of COVID, it would happen in 2 years or 3 years. That's it.
Okay.
And Uday, just to support what Rajul said, let me take a company called Mondelez. It has multiple brands, but one of its brands is Cadbury's 5-star. Till 2017, they had almost negligible online presence. They wouldn't sell their chocolates or a bouquet of chocolates through online. But in the last 3 years, and especially in the last 10 months, they have started to sell a substantial number of chocolates online, and they see that area growing, while they're all about retail presence and their omni-channel in the way they actually do things. But online, just to support Rajul, whether you're a B2B company or a B2C company, right from demos to, earlier we would say search online, purchase offline, but it's search online and purchase online kind of environment right now in a lot of categories that were low involvement and didn't see any absorption of, digital commerce. And social commerce is going with it. Today, through content, communities are being built, and through those communities, commerce is happening.
Yes.
It was, we are, in my view, we are still in early days. That's an area that will expand hugely, where when Uday makes a recommendation on a product, somebody will buy because Uday made a recommendation. So social commerce is growing in a big way.
Absolutely. Okay. Well, I think Kriti will obviously agree with that point because that's her sector. Okay, I need to take a break, but Kriti Agarwal, quick comment to you since it's your sector. Yeah, you can weigh in.
Yeah, definitely. You're absolutely right. That social commerce, people are looking for recommendations and then only they are buying. That's the way they are, taking the feel of the retail buying and the pressure of retail buying. And they feel that online buying is becoming more and more accountable, and they're saving a lot of time and money through the different discounts and offers that are coming through different market channels, marketing platforms this marketplaces.
What have been some of your big lockdown lessons, while working in your personal space in the year gone by? Rajesh Gupta, let's begin with you. Lockdown lessons of the year 2020.
Lockdown lessons was that MSMEs and SMEs were not prepared for lockdown. So everything was concentrated to their offices only to run the business. So this was the biggest lesson, that everyone should be prepared to work from anywhere. So I think our segment was not prepared for that, and we ourselves were not prepared for that. But being a a software company, we manage it well. We just need to transfer our source code to the cloud and we were working. But all our customers were not ready for this. That was a huge loss for them. And now everybody, all the customers are trying to go for cloud solutions so that they can work from anywhere. You see, we provide accounting and taxation solutions to our customers, and that is the backbone for any business in small businesses. So that was the biggest lessons for our customer and for us also, to be online, not to just have concentrated to our offices. That was one thing. Well, that was the main learning during the lockdown.
And I want to ask you, since Rajesh, you deal with SMEs, and tell me, how's the credit issues with SMEs? If you had to recover 100 rupees, how much have you been able to recover? Is 100 equal to 90 or 80 or 70?
For us, it was not a problem because in our case, our product is not very costly. And so for us, it was not a problem. We normally get immediate payment from our customers. But our customers are facing liquidity issues. That is hampering their business because the liquidity has gone down in the market and payments are stuck for everyone. Specifically those who are into supplying businesses, supplying raw materials and all these things. So they are in problem. For us, it was not a problem. Credit problem was never there.
Okay, that's good to know. What's your top lockdown lessons, Rajul?
So number one, so I am a operations and supply chain guy always, but last 3-4 years I am running a tech company. So I never believed in work from home, and it was a big learning that work from home is just too good. Yeah, that's number one.
So never say never. Sometimes.
So never say never.
Yes.
Efficiency shot up. That's one. On the personal front, I was able to beautifully mix personal and professional life. I think earlier the time got segmented. This is the professional life segment, this is a personal segment. Yeah, time. And inefficiencies within each segment cannot be replaced, correct? But now I can, replace one segment inefficiency by other segment efficiency. So that's another one. Third, thankfully we were not in that space, but a lot of startup learned that having cash in bank and making profitable business. And I think investors learn, investors started talking about profitable businesses, which I've never seen in last 10 years. Yeah. So that's another learning. Yeah. And I think the most important one is having solid processes in place. Yeah. Non-human driven, or let's say technology and processes driven organization in place, a very lean. Yeah. That's the biggest learning for us, and it has helped us a lot. We could transition from work from home in 2 days. We were probably the first company to move to work from home. We started mid-March, probably the last company to will open the last. But those were the learnings.
Okay. Kriti Agarwal, what are your top lockdown lessons?
As Rajul has rightly said, working from home, it was never, there in our company too. But during COVID time, during lockdown, we allowed that, and we saw a huge, change in the productivity. So that has been number one. Secondly, the focus on health has increased tremendously. People are now doing exercises. They are getting, they can balance their work and, professional and personal life. There is a balance there, and they're focusing on their health. To a great extent. They're, doing yoga, doing different exercises. Along with that, they're cooking food at home. So the employees are doing, they're eating home cooked food. So that is again, one very big positive point.
Okay. Everyone has seen the positives in this very tough situation. Let me go to Amit. Amit, what are your top lockdown lessons?
Sure. So I think one of the things that happened is the world became a global village, right? And the right things, I think I read somewhere from you, Anurag, how the importance of values and doing the right thing really matters, because all sorts of news was going viral about all sorts of brands. One of the things that has really helped us is, we've got more than 25% organic revenue coming in. Because we've always treated people nicely, fairly, provided product at a great value price point on core skills like English, etc. So that was one thing. The other thing is, I think in general, I found in crisis, people are genuinely nicer and kinder to each other. So I'm extremely grateful to all the things that came my way, and also grateful for the opportunities I got to contribute back in my own small way. But in general, I think there was more gratitude going around, more kindness going around, because the world got united around crises. And I've never seen that before. Paranoia is something that I file myself too junior to comment on, but that was ample in supply. And I think I saw some brands benefit from it, some brands fail because of that. I would just go back to the first thing that I said: do things right, and everything else falls into place. Treat people nicely, be fair, provide good value as a brand, and you will always, always, always be loved by your users.
Okay. Vinod Tharakan, you've been a seasoned entrepreneur. You have multiple lines of business. What are your top lockdown lessons?
I think I would agree with the panel. I mean, the biggest ones have been the fact that work from home is really a thing. And the productivity gains, in our case, we measured it, it's in excess of 20%. And in addition to the work from home concept, the other interesting thing is the physical location of your staff don't matter anymore. So during the lockdown, we opened up operations in Goa. So we have a growing team in Goa now on the West Coast. And interestingly, what I'm seeing now is that's happening from businesses in Mumbai and Bangalore as well, because physically their staff can relocate to a different location in the country itself. So that's been huge. The work-life balance, of course, has been a big plus, just like the other panelists have shared. The fact that you can merge and mix your personal time during your work time and have maybe extended support on the work front as well, because you're now doing the work from home, means you're adding more value to the business. And one small intangible, I think, that has been a big one for us to witness is the fact that we are all switching on video on meetings today. We could have done this 10 years ago, we never did. I think it makes a huge difference. And that's breaking all the boundaries as well, because when you have, let's say, in the Western economy, your staff working from home, now it doesn't really matter if that individual is in India, in China, or wherever, right? It's almost the exact same experience. So I think it's not going to go back to the old normal for sure. And you can see the perspective shared by the other panelists as well. And it'll be interesting to see this new world that we're going to transition to from a lifestyle standpoint as we come out of the COVID situation.
Okay. Vinod, clearly you're right that, you know, geographical boundaries have been broken. Today you can access tenants from anywhere in the world. You can be located anywhere. So clearly, you know, location is not a constraint. It's actually an enabler. It can actually help you do more. And you're right, culturally, I mean, you know, if I just take what Amit said and what you said, if you're doing a video call, even if a, you know, colleague's baby pops, it's actually a fun moment. You know, it's a warm moment. It is not necessarily an irritation, you know. So I think our attitudes have changed because of our own experiences in the last 8-9 months. Let me ask you, when do you see the Indian economy back in full bloom? 6 months, 12 months, or 18 months? Let me start with Vinod Tharakan. And why? Do qualify your answer.
I would say we should start seeing a real positive impact for the wider economy in a 12-month period, and most likely Q3 and Q4 of 2021. The simple reason is everybody's just coming to grips with the COVID situation, and now with the vaccine you know, on the horizon, it's already here. I think it should have a positive impact on creating this herd immunity to ensure that there's lesser risk for at least a lot of the physical jobs where you need to walk into a factory and such. So I think we're going to see an impact starting Q3, Q4, and a lot of pent-up demand is going to explode as well, because people have not been spending a lot this year, and I think all that restrained spending is going to be unleashed sometime in 2021. So 12 months.
You would say 12 months. Again, it is sectoral dependent, but Rajul Jain, when do you see the economy coming back in full bloom?
Unfortunately, I am not qualified enough or expert enough to answer this question. I hope as soon as possible. That's what I can say.
Okay. You know, none of us knows the future, but the reason I ask that you're entrepreneurs, from the tractions in your own businesses, you can extrapolate to a larger economy. And in some way, what you see happening in your own business and sector is representative of the larger economy.
So in that sense, I think the fashion, so we are more related to fashion business. It's already, I think, 70% of pre-COVID era. Yeah. So.
Okay, people want to look good on Zoom in spite of them not going out for dinners. They want to look good on Zoom, so I guess people still. But there was a study, we said the sales of lipsticks has gone down because a lot of women are wearing masks, whereas the sales of, kajal have gone up. I mean.
Yeah, so that's happening. That's happening in fashion as well. People are buying more leisure wear rather than a formal wear.
Absolutely. Kriti Agarwal, when do you see the economy coming back in full bloom?
So maybe in 6 to 9 months to say so, because the GST collections have improved and people have started moving out. So it's a partial lockdown is there, but not fully. So people have started moving out during festival season. We saw a big jump in buying, different products from marketplaces. We saw a huge jump in online buying pattern. So I think the physical stores have also opened up. So I think max in 9 months it should come back.
Okay. Rajesh Gupta, what's your sense in terms of the economy being back in full bloom?
I think it will be 6 to 12 months. GST collections are already almost near to pre-COVID levels. Some of the sectors have gone down, like hospitality and travel industry, but some of the sectors, some new sectors have come up. Like all COVID-related sectors have come up. Lot of vaccines being made, lot of masks being made, and the PPE kit and all this. So other sectors have opened up, and the way share market is booming, it looks like within 6 to 12 months we will be back to, or maybe better than the pre-COVID level.
Okay, I agree with you that 6 months should be the right horizon to see the economy going back. And in my view, next 9 to 12 months, it should be at levels that are healthy.
Right.
Last but not the least, I would like to ask our friend Amit. Amit, when do you think the economy will be back in full bloom and why?
Sure, I think I'm a data guy as a maths honors graduate. I saw the first signs because of late Diwali. The Q2 numbers were way more than what I had thought it might be. There was too much of pessimism going around, but the data told another story. My personal take is that a lot of correction will happen, a lot of new models will emerge, but after March is when I see quite a takeoff. I'm with Rajesh when he says 6 months around from now, you will see the first signs of full blooming recovery. And my bet is it will be bigger and better. The reason is India has certain basic advantages, which will come to the forefront. The huge amounts of middle class. Fear and paranoia are strong emotions. There will be new categories where consumers will be spending that money. There's a lot of pent-up demand. Somebody spoke about it. I think Raj will talk about it, or maybe Vinod did. And that will come to the forefront. People are spending more on health, lifestyle, etc. So nutshell, I think in 6 to 12 months, I think it'll get better than ever before. And India will be at the forefront of leading world's growth.
Okay.
Okay.
Well, that wraps up today's edition of the NewsX Business World panels on the Indian economy. Let's certainly hope that the economy will be back to pre-COVID levels sooner rather than later. But for the time being, my thanks to all of our guests for joining us.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.